Do we have sound now? Oh, seems to be better, I think. So, perfect. One message. Okay, so we should have sound on Telegram. Yes, and we should have sound on YouTube too. Can somebody confirm that on YouTube we have sound? Okay, perfect. Sorry about that. Had some mix up in the mic. Okay, great. So, welcome everybody to our second session of master classes that we are designing to help all the traders on the Bitscap channels. And the idea behind these master classes is to provide the basic knowledge in trading strategies, in portfolio management, how to understand the tools that we are using on a daily basis to make profit. So this is the second of the series. The first session was a month ago, from if I remember correctly, which was much more around reading trends and understanding how the price action moves and what are the trends, critical items such as support and resistance items. Really understanding how to read the trends and how to better configure the different bots that we're using. So in this, before we get started, just wanted to uh, have a quick, uh, a quick security notice around security of all the users, especially on Telegram and Discord and all these other tools. Just a second. So basically, all the crypto-related channels are targeted by individuals who are typically trying to scam people, scam users, all the new people coming on to different channels. And one of their way of doing that is to pretend to be admin or support members. So basically, there are a few rules that we need to set. For your safety, for the safety of your funds, it's always about checking who you're talking to, especially on Telegram, where people can have multiple time. We can have the same names, and they can pretend to be an admin or a legit user, but most of the time they are just pretending and trying to be helpful just to be able to get your funds. And we want to avoid that. So one of the basic rules is that admins or support team will never, ever communicate directly with you, uh, will never communicate with you through direct messages. They will never share or never communicate with you in private messages. We only trust the general chat. That is the only chat that we want people to be. Most of the time they will ask you to delete your messages from the main chat so that actually legit admins or support teams will not be able to answer your question, and they just try to keep you among themselves on a private chat. So we want to avoid absolutely that. Never trust a private conversation, only trust the conversation on the main channel. And this is, all the users, we should be working together, and we get a ton of messages from people, talking about investment platforms, or they want you to connect your wallet to a given website, etc., which is outside of Bitscap, absolutely. And that is all scamming people. So just be cautious, be aware that it is a tricky world. Crypto is a tricky world, and the only way Bitscap will ever provide support is live chat on the bitscap.com website or directly using the email, which is support@bitscap.com. So just stick to those rules. Do not trust the private messages and keep all communications with Bitscap admins and support teams on the official channels, and we should be good. Okay, so that is typically, one of the security rules that we need to follow. Now let's get started with the remaining of our presentation. Let me just switch this on. Okay, so last time and last masterclass, we really talked about uh, how financial markets move, and this is not just related to crypto. It is a general theme, which is financial markets move in a very defined and structured way. People think that price goes up and down, but it's a bit more complex than that. It includes how people, the buying pressure that we have, the selling pressure, people taking profit. So all that you know makes a real design, and it can be not forecasted. That would be wonderful, but at least we can identify typical trends. And the trends that we usually see on all the financial markets are going to be uptrends, sideways, and downtrend. Depending on the trends, it will typically, the trend will define the strategy on what do you want to do, on what time period do you want to do that. It will also identify which is the correct tool that we want to use. It can be just spot trading. It can be just holding some asset and then waiting for the price to increase and then sell it off to make your profit. It also helps you really identifying, when do I start my trade, or when do I start a bot, and when do I exit a bot, which is even more important than basically starting a bot. Exiting a bot is also something that should be taken care of. And all that, understanding the basic trends that we are following and that how the market is moving, it will always allow you to minimize the risk that you're taking, because we're talking about cash, we're talking about money. We don't want to lose money. So having better view and understanding of how the market is moving or what is the current trend will allow you to typically have the correct decisions. uh, Things do go wrong, of course. Then you need to have just a backup plan and see how to adapt to that. And always, try to look at things. And one of my experience that I've had and that I had in my early days of trading, that is really that I was looking at very short time periods. I would be looking at trends which were 15 minutes, an hour trend. But we really need to take perspective on that. So just move out a bit, have a bigger picture view. And that typically goes by using and having a view of how things are moving on a 1 hour trend, on a 4 hour trend, on a daily trend, a weekly, monthly trend. And that really defines the different trends, and that gives a much better perspective on what we want to do. We also talked about trend types, primary trends, secondary trends, trend types, all these different trends that are happening, and we need to leverage these, because these trends are really going to be our friends, because that is typically which is going to help us identify you know what is happening on the price, when do I want to start a bot, when do I want to exit a bot, etc. And these are really uh, it's really something that should be monitored. You don't have to monitor it every day, but it can be on a daily basis, it can be on a weekly basis, but at least it's giving you a sense of what's happening on the market, which is very interesting. A second aspect, which is very important also, is really this support and resistance areas that we identify, looking at the trends and seeing where the most transactions are happening, where is the price, what is the bottom line, at what price is the price going to drop of a given asset, and if it's going to bounce off it or if it's going to break the resistance. So understanding these different support and resistance zones is going to be, these are really critical areas where something is going to happen. Either it's going to have a continuation downwards if price is going down, and then that resistance, such as over here, that resistance, once it's broken, goes to the resistance which is below that one, the secondary resistance, and that resistance becomes now that support becomes now a resistance area. And so the price is going to move between these support and resistance areas. And this is typically something that needs to be identified typically when you're defining your ranges. And we'll see later on the grid, for the grid strategy, the grid bots do require us to define a given range. So how do you define a range? A range is going to be somewhere where we are expecting the price to move between a high price and a low price. So how do we identify that? And those are typically done by reading, using tools such as TradingView, which are trending crypto trending tools. These support and resistance areas are very significant and should be defined as markers in all your bots, at least for the grid bot, definitely DCA also. It is really something which is going to be very, very important. So we also talked about, there are many tools out there. Um, a simple trading could be just, buy some asset, hold on to it, and sell it in 2 years' time. That's a trade. It is a trade. It's a valid trade. Only problem is that in these type of trade, these are much more longer term trades, and they don't require much intervention, or they're very hands off. Still, they're going to require some expertise. When do I start a trade? When do I exit a trade? And the results can be significant. The risk also is significant because you could read the trend wrong. So it could be wrong. We've got copy trading, we've got earning pools, we've got automated pools, which is much more dedicated for traders who want to automate a given strategy. And that is where Bitscap and the whole platform provides a set of tools which is going to automate a set of things that you would normally do manually, but it's going to automate it for you. And so it's going to really remove all the stress of monitoring the trends, really to allow you to have a very good offhand experience. But we still need to understand how the tools work. So, the thing that we're going to be looking at much more deeply today is going to be around the grid strategy. The grid strategy and the grid bots are typically dedicated, not dedicated, but they are much more effective on clear identified uptrends. Sideways market is wonderful, and downtrends can also be used if you're in a mindset of accumulating a given asset between support levels and the resistance level above. So it can still be interesting. So what we're going to do, we're going to have a deep dive in the grid, how the grid strategy works, what are the differences with position trading, and having a look into how actually a grid bot makes profit. That is what we're all interested in, which is uh, really understanding how things are generating profit. So let's take a simple example. A simple example is, imagine you're in a mindset of investing. And so in our example, we'll be investing in a house or a car, whatever. something, you are buying an asset. This asset, if you're in a traditional position trading, you would buy this house today at a given price, and then you're going to wait for some time, given number of months, maybe years, and you're expecting to sell this same asset at a higher price. And that is what your profit would be, which is I bought it maybe 100K, I'm selling it 120K. Okay, I made 20K of profit. That's one way of trading. The grid trading is also going to leverage this price increase. But the main difference with grid trading is that the concept of buying and selling an asset is we're adding to that the fact that we're going to rent the house now. So the house is going to pay by itself. By that I mean that typically, let's imagine I buy a house, keep it for 2 years, and I'm renting it. So every 2 months, every month, I'm getting a rent out of it. I'm taking profit out of it. So actually, the price of the house is not really something that I'm interested in. I'm not really interested in the valuation of the house. The price could go at 110K or drop to 90K. I don't really care because what I'm really interested in is going to be the rent that I'm able to generate every month. And the interesting thing is, whatever happens to the price, I'm still accumulating this rent. And so after 2 years' time, I would have made just by the rent I would have made 24, 12 and 12, 24. I would have made, if the rent is $1,000, then I would have made 24K of profit just with the rent. And I still have the house in whole. And so the rent is just going to accumulate over time. And that rent is going to be able to compensate for any valuation loss, if there is any. Imagine in 2 years' time, I made 24K with my rents, and I'm selling the house 90K. Okay, 10% less. So that means that basically I made 24K on the rents, lost 10K on the valuation. That means that we've got basically 14K profit. So even if I'm selling the house in 2 years' time at 10% price at 10% less than what I bought it, I still made profit. That is the beauty of running grid bots, where the valuation of the asset, of course, we are expecting it to rise. So on the same trend, if the price ends up in 2 years' time plus 20%, I have made 20% on the P&L of my purchase price, and I've made 24% on the rents that I accumulated. And that's the whole beauty of grid bots. So that was a quick, simple example of, I was just trying to position this in how we would deal with an investment from a global perspective and how the grid bots differentiate. Now, there are some catch to this strategy. It's like any strategy, it's not perfect. There are some catches, and we'll try to go through them and really understand how they work. So, the grid strategy, how does that translate into basically financial markets and especially crypto markets? It's also applied on traditional markets. It's exactly the same thing. So grid trading is typically going to be we're going to place a grid, which is with a number of defined grid levels, and we'll talk about that a bit later. A grid of orders that we're going to distribute on a price range. Typically, what would be the minimum price that I would hit, or what is the maximum price that I would hit? The technique is really about capitalizing on normal price volatility, which is, everyday price goes a bit up, goes back down, etc. And what we are trying to do is really take leverage of that and take profit on the small movements rather than having a big profit at the end, maybe. So there are pros and cons, of course. Gridbot is pretty easy to use. It's a very set it and forget it concept. It can be used for long term, short term, mid term, depending on how you set it up. There are differences on how you're going to identify your ranges and the settings that we'll be using. It can be used pretty much with all the trends. Whatever is happening on the market, a grid bot will be able to generate profit. That's the wonderful part of it. The cons, typically, it requires you to invest funds. It's not really a con because in any investment, you would still block your funds. And of course, one of the things that many users talk about is, my P&L fluctuates a lot. And the P&L is going to fluctuate, of course, because you're acquiring assets and the price of those assets is going to have ups and downs. So basically, the profit that you're making will be impacted by that. But there, if you follow simple guidelines on when to start a grid bot, when to exit the grid bot with clear indicators, it allows you to always be in the green. And so that's the interesting part. Now, last time I also talked about, what would be the typical setup and how what would be the workflow that we need to follow to ensure that we are not going to make a mistake on the investment. It's a very simple five-step method, which is, how do you select your asset? Which one do you choose? There are so many assets that you could be. If I give an example, you could go to the store and you could pretty much buy anything. Now, which one are you going to buy from an investment perspective? So that for those, typically it's going to be driven a lot by the hype in the market, media communications. It's going to be about fundamentals. What is the project about? Uh, what type of strategy are you having? Is it just you want to make a quick buck out of it, which is a very speculative type of investment? Or are you really into an investment strategy which is going to be longer term? So, those are things that you need to figure out. If it's just to make money, making money is not a strategy. That's, I don't know what it is, but it's not a strategy. So once we've selected the asset, we've chosen what we are going to trade. Second thing is start digging into it. Look at the trends. What's happening? Is it going up? Is it moving sideways? Are we in a distribution period? Are we in an accumulation period? It's really going to be about understanding what is happening on the price. And based on what's happening on the price on a long term vision, and that could be over a month period, over 2 month periods, etc., or it would typically help us design, what are we expecting? And once we have designed what we're expecting, that would help us, you know, put the strategy in place and define the settings for our grid bots and DCA bots, etc. So that is really understanding these trends is fundamental. Identifying third level under identifying the support and resistance levels, which is, how do I define my range? What is the minimum? What is the maximum? Do I just put in figures by guessing? Not really. They are all these support and resistance areas are always marked. There is always something which is happening because that's where reversals happen. That's where uh, we're going to try to hit a resistance area and try to break through it. Will it break through it? We don't know. But if it does not break to it, it will come back to the support resistance. So we know where things are going to be ranging. And that really allows you to define the range that we're going to be working around. Validating volume and volatility, which is something that can be interesting. There are several indicators out there, ATR, checking the 15-minute candle and seeing what is the average value of the movement on a 15-minute time period, things like that. So it is really that's going to define how close or how small your trades are going to be, or how fast are you going to be able to trade in Gridbot. We don't want to get into high speed trading, which is something else. But keeping it at a 5 minutes or a 15 minutes, if my range or my grid step is going to be able to cover a 15-minute candle, that means that I'm going to have a buy or a sell transaction, and that's what I want. And finally, set up the grid on one or two as well. Oh no, those was a sorry. There's a mistake on my slide there. Step 5, which is identifying the entry and the exit points, and it's typically checking the RSI on the trends. There are ups and downs. I want to get in when things are down, which is typically RSI, stochastic, momentum, a lot of things. That's when I want to start my bot. And when do I want to exit? I want to exit the bot when things are blowing off. That's when the price is at the upmost. So these 5 steps are the basic things that you need to be looking at to very easily and have an offhand experience. And doing this research often allows you to trust your strategy. It's always about trust. If you know that the price is going up, doesn't matter if locally or temporarily, it's just going down, because you know that on a long-term perspective, it's going up. So it's interesting. Now the grid strategy itself. Uh, how does that work? A grid bot or a grid strategy is defined by different parameters. One of those is the total investment that you're going to allocate to a given bot. Uh, that investment then gets divided into all the grid levels, which is, let's take an example. If you're putting in $1,000 and you've got a grid which is set up with 10 levels, that means that you are dividing your total investment by the number of grid levels, which is going to be 1,000 divided by 100 divided by 10, which makes it every transaction is going to be $100. And now that is the amount that the bot will be transacting on a smaller base. It's typically every time it's going to hit a buy or a sell order, it's going to trade $100. On top of that, you can also define what we call the grid percentage. The grid percentage is typically the difference between 2 sell orders or between 2 buy orders. That's the range. That range, the grid step, as it is shown on the graph here, the grid step is typically something that you can play along with, that allows you to uh, looking at your candles, see if you have every 15-minute, you're going through that grid step percentage. That means that you're going to hit a sell or a buy transaction. So that's basically your accelerator. It's going to define the pace at which you're going to accumulate the profit. So in our case, if we use, in our example, a grid step of 1%, that means that every time the price is going to have a 1% move, you're going to have a sell or a buy transaction. Of course, we make profit of sell transactions. Profits are not made on buys; they are only realized on sells. So in our case, we've invested $1,000. We've got 10 grid levels. That means we've got $100 per level. We're monitoring a 1% change. That means that every time bot is going to have a sell, it's going to make $1 profit. That's small profit, but it's endless. And that's the beauty of the grid bot. It can run for years. And if you're running one or two transactions every 15 minutes, I'll let you count how many transactions that can be thousands of transactions. And I'll show you some examples of that. So very simple setting up. We also have on the grid bots what we call the no trading zone. That is something which is important. The no trading zone is necessary and mandatory to be able actually to make profit, including the fact that when you're buying, you're paying exchange fees, and when you're selling, you're also paying exchange fees. So you need to make that 1% profit added to the exchange fees that you're paying. So that is why that no trading zone exists. So how do we set up a grid bot? There are many ways we can set up a grid bot. Depending on your initial setup and how you want the grid bot to run in the future, because this is really about what am I expecting in the future. If you're expecting a drop and you want to start a grid bot now, what you would do is rather, the second column where you would say, well, okay, I know that the price is going to drop. So what I'm going to do is to be in the first period, I'm going to be in a purchasing mode. So I've got more buy orders than sell orders because I know that the price is going to go down. And I want to be able to capture that drop, which is going to be critical. If you're expecting a rise, you do it the other way around, where you want to minimize the buy orders, which are the green lines in our case, which are new purchases of assets. And what you want to do is what you want to be selling towards the upside. And that is how you would balance. There is no real rule. There is no perfect thing. There is no what is the best method for this. It's just on appreciation on what you're thinking is going to happen in the future. What are you expecting? It depends on your trading style. It depends really on the future moves that you have identified or that you are expecting, and of course, the support and resistance levels. So there is no rule. It's really about, where are you thinking the price is going to be moving next? That would be your initial setup. Now, there's a second aspect that is very critical in grid bots. As with the example of the house that I was talking earlier, you purchase a house initially, you buy it 100K, and then the price of this house is going to vary. And that's exactly the same thing with grid bots because basically all the green lines are dollar value, they're going to be in quote, which is USDT or BNB or ETH or BTC, whatever pair you're using. And the red lines is actually assets that you'll be selling. So those are on a pair. Let's take if you're talking about BTC USDT, the red lines are BTC that you acquired at the start, which defines your average buy price. And if price goes up, you're going to sell that BTC. So if you're selling the BTC, that means that you have less BTC now, and you have more cash, and you've got your profit. Depending on how the price is going to move, typically it either goes up or goes down. That's every day's life in the price action. On a longer term period, it could be ranging, etc. But locally, on small time periods, it's either going up or either going down, price dropping or price rising. Uh, if price is dropping, that means that you're buying more of a given asset. Furthermore, it's a bit of applying a DCA strategy in a way because uh, if the price is dropping, you're buying more of something, which means that your average buy price is going to be lower. So you're getting better value out of it. And when the price is going to rebound, well, you'll be selling those assets that you purchased. When, the other way around, if the price is going up, you would be selling your BTC and having more cash ready there to capture any drop if it happens. Now, while this is moving, and we can see a few examples here, these price movements are really up and down, small up and downs. So you're going to sell three transactions, then buy two, then sell one, then buy five, then sell two, etc. It's all these movements. And every time you see a red transaction there, which is a sell, well, you're taking $1 profit. And that's the interesting thing. And you're just going to accumulate that over time. The value of the assets that you're trading is still fluctuating. That's your unrealized P&L. And that is going to be reflected in the dashboards because you've got the bot profits and the P&L. And the real P&L, if you close the bot, would be the sum of both. So that's why you see your P&L moving up and down depending on the price movement. But we should not really be worried about that because it's something that we expect to come back towards the higher prices. So if it takes a month, well, it takes a month. If it takes several months or years sometimes, it doesn't matter. What I'm interested in is that the price stays between my range that was defined. So uh, the average buy price is something that's going to be critical. It is something, the starting of a bot, that's your initial start price. That's when you acquired the first lot of assets that you are going to trade. As you're executing new transactions, typically if you're executing a sell transaction, then in this case, well, actually, okay. Sell, buy. If you're executing sell transactions, the average buy price will not change until you actually have a buy on you hit a green line, because that's when the price is going to be impacted. The number of assets and the average buy price is going to be impacted by what are the new assets that you're acquiring. And that happens every time you hit a buy transaction. So when price is moving up and you're transacting above your average buy price, then your average buy price has a tendency to move up, which is natural. And if you're transacting below your current average buy price and you're executing transactions below the average buy price, your average buy price will have the tendency to go down. So it is a bit following where the transactions are happening. It is, of course, impacted by how much of the asset you own and where you're transacting and where the transactions are happening. So it will evolve, and that's why you see, I think it's represented on the Bitscap charts. It's represented in yellow. It's going to be moving around a bit. Just give it time and you'll see them moving with upwards with the price or going downwards with the price. It has to follow the price because that's where all the activity is happening. So it is something that will also impact how do you close the bot, because if your average buy price is evolving with the transactions, you should not be focused on at what price did you start the bot, because that's not really important because as it is evolving. So that's not interesting anymore. What is interesting is what is the actual and what is the current average buy price. That is what is going to be really interesting from a closing perspective. When do I close a bot and how does it impact my PML? So the average, and I'll just go through this. There's a whole topic around average buy price, and we'll share this PowerPoint so that everybody can read through it. It's a whole description of how it goes and how it works, and how your average buy price is going to be moving around. Just to give you a understanding of, you know, the value of the assets that you own is moving around. It's going from base assets into quote, then from quote into base assets. And so it's just a balance between both. It's being balanced as the bot is running. And there are some special cases where, and I'll let you go through this when you go through the PowerPoint. There are two special cases, which is when I hit the top of the grid, I don't have any more any base. I've sold everything. So I only have quote. And the other special case is when I'm hitting the bottom of the grid, which is I don't have any more quote. I just have base. And so that resets, those are the resetting areas for your average buy price. And from the on top of that, so basically, what's happening is that it's going to run between this range, and your PNL is going to fluctuate with the price. But what you're interested in is not really that it's fluctuating; it's the profit that it's generating. So I'll let you go through this. Just to finish off with the value flow, as I said, basically your average buy price is going to change based on where you're acquiring stuff. In this example, we started the bot, which was at a 1,000. The price was at 1,000. I've been buying additional assets as the price was going on. That's bringing my average buy price lower. That's a sort of DCA that we are executing on that. The same thing if the price goes the other way around. So I'm selling off assets at a higher price, making profit, and then the green lines here, which are purchasing of new assets at a higher price above the average buy price, will increase my average buy price. So there's a basic uh, something very basic that says how money is going to flow between the amount of base you own and the amount of quote you have. If price is dropping, that means your base quantity amount is increasing, the quote is decreasing. The other way around, when the price rises, profits are going to accumulate whatever happens. But what is going to be interesting is that your unrealized P&L, which is the value of your assets, is going to be either negative or positive depending where the current price is compared to your average buy price. So it's going to be either negative and positive or positive. Basically, what's going to happen is that the profits that you're generating is going to compensate for the loss or be added to the gain if the bot is in green. But it's not really important whether it's negative or positive because you're not closing it right now. You're expecting profits to keep on going. Now, when you're starting a grid bot, typically what you want to do in a grid strategy, you can start a bot whenever you want, depending on the trend. If we are on an uptrend, it's just perfect. It's always going up, or at least it's going up for a few months. So you can start it whenever you want. So you'll always be hitting higher sells because the strategy of a grid bot is buy low and sell high. So it will keep on going up. But during that going up period, they will be going up and going down. That's where you will see the P&L that's going to be impacted. So what you need to identify when you want to start a bot is from a pure psychological perspective, and this does not change the underlying profits that you're making, but it's just psychologically seeing green is better than seeing red. So you can very clearly, on a very simple monitoring of indicators such as stochastic or RSI, you can very easily define, when do you want to start your grid bot. Typically, your entry points should be on lower ends of the RSI, and your exit points should be at the top end of the RSI. Those are very simple rules. And as you can see in this case, these are typical entry points, exit points. If you see that the momentum is keeping on going and the price is still rising, even if the RSI is fluctuating, you don't have to exit. Those are just typical points where you could exit in profit if you wanted to exit. So having this clear view of what are the key areas where you can exit is also important, because that's where you would be maximizing your profit and minimizing any loss. And this is something that can be monitored either on short-term bots. You want to run it for a week, you would have to monitor this. If you've got a bot which is a white bot which is running for months and or years, you don't really look at this, and I'll show you a few examples of that. Typical grids that we see in the crypto world. Many people ask, what is the best setting, what is the ideal setting for a grid bot? I would say there is no ideal setting. It's just some settings. So, from experience, we know that a lot of people are running grid bots with 30 grid levels, 70, 120, or 200 for very large grid bots. The goal of having these different setups is going to be a bit different due to the time range that these bots are going to be able to run. Typically, if you're running a 30 grid, 0.5%, that means that you're covering from a range perspective, you're covering 15% from a range perspective from current price. 15%, we've got in crypto, we've got drops that are 40%, 50%, or we could have a downtrend that's going to go down 60%. That happens. So that means that at some point in time, if you're running this short 30 grid levels with a 0.5% grid step, that means that you have to monitor it, and it may fall out of range, either downwards or it will go above the grid. And then we've got features such as trailing up, etc., where the grid will follow the price action. When we're running 70 grids, that's something that's going to have a better coverage. It's typically for bots that are going to run days to weeks. And as we keep on moving along the grid levels, the wider the grid range, the longer it will run. So running grid bots that are 150 to 180, 200 grid levels with a step percentage that could be from 1 to 3%, those could last for years. They are just they're just going to run for years, because price has to have 300, 500% movement to drop out of the range or go above the range. Uh, the bad side of that is the wider the range, the more grid levels you have, the bigger the funds that you need. Uh, Typically, because there's a minimum order size on the exchanges, so you need to at least meet that minimum requirement. And the more grid levels that you have, the more your initial investment is going to get divided among those grid levels. So you're going to make smaller and smaller profits. Doesn't really matter that your profit is smaller, and I'll talk about that just afterwards, uh, because you're going to have more regular and more often transactions on a 0.5 percentage grid step rather than a 1 percentage grid step. So if you have a 0.5% grid step and you're having 15 transactions per hour, if you moved it to a 1% grid step, well, maybe you would only make 2 transactions per hour. So it's again a balance. How often do I hit a transaction? At what speed? And how much am I making out of it? Those are two different things that need to be checked. The grid step definition is going to vary based on the crypto assets. There is no rule. From experience, the sweet spot in crypto and for the type of volatility that we have in crypto is around 0.7%. But we've got traders who only trade at 1.5%, others who only trade at 3%. It's just really a matter of your own personal choice, and it's going to be based on the candles and the type of volatility that you see on the different grid boards, on the different assets. Typically, what you do is, as on the graph here, looking at a given candle, you try to identify what is the typical height of a candle. And you could be looking at 1 hour, 4 hour, daily, 15 minutes, 5 minutes, whatever period. You could be looking at that. Usually, uh, personally, I look at the 15 minutes and I try to identify what is the typical height of a candle in a 15-minute time period. And that gives me, or at least drives my decision on what grid step I should be using. So these different bots are really going to be, these different configurations are really going to be all about the strategy. How long do you want the grid bot to work? How many support and resistance levels do you want to cover? Um how fast do you want to have it running, and how much funds do you have? All that is related together. And you need to find your own sweet spot on that based on your funds, based on how much time you want to allocate to this. It's really about building this strategy, which is critical. It's not, these tools are designed to help you with your strategy. The tools are not magic wands. They are, you've got a strategy, you use the tools to apply so that you can, run through your strategy. So these, depending on people, some prefer having quick starts and quick shutdowns. Others prefer having it running longer. So these are just some quick indications on typical setups that we see. One is not, I would say one is not better than the other. They are just different. They are different. They are all going to make profit, some slowly, some faster. Okay, narrow with white grid. So I had that one in double. Okay, one other question that comes up very often, and I'll not go through all this. I've put all the details of all the evaluation that I did. I think it was a year or more than that ago. We know that we all have transaction fees on exchanges. There is no magic. There is no running around it. You have to pay your fees. That's how exchanges get paid. And so, in order to minimize that cost, which is a cost because it's typically deducted from your profits, what you want to do is minimize the cost of those fees. Every exchange has their own rule, has their uh, you know levels where you'll get a decreasing exchange fees. You'll have exchange reductions if you're paying your fees in BNB, such as on Binance, on TRX, on Poloniex, KCS on KuCoin, etc. Every exchange has their own coin. If you decide to pay your fees in that coin, then you're going to minimize the cost of the fees. So they give you a 20% to 25% reduction on the fees, which is quite interesting. And typically, how you would deal with that is uh, run run your bots, monitor the asset which is providing you the discount. And when you see that there are drops in the price of that asset, you purchase a given amount. And then you use that to pay your fees. in the background. And just monitor that. You have to buy those assets when it's interesting. Of course, if you're looking, very often the question comes up, I can have a very tight grid with a lot of grid levels, or be on the same range with a wider grid level. Which one produces the more profit? From all the evaluations that we have done, uh, tighter the grid, the more transactions you will be generating. Okay, they will be smaller, of course, because the amount of your initial investment is distributed over the grid levels. So you're trading smaller amounts, but more often. So at the end, you're transacting a bigger amount than if you have got a wider range, a wider grid step. So your transacting amount, which is what exchanges count, is going to be bigger and higher if you have got these tight ranges and these small grid steps, which means that on a same price movement, you would be paying more fees. That's what we call the fee to profit ratio. So as you compress the grid into much closer grid lines, you're transacting more and more, faster and faster. You're actually transacting a bigger amount overall on the same time period. So your ratio fee to profit climbs, increases, and your profit increases also. So the conclusion here is the smaller and tighter the grid, the more fees you're going to pay, but the more profit you're going to make. So as we are only interested in the profit and not in the profit ratio, well, actually, the tighter the grid, the better it is. So it's the fees we have to deal with. There is no magic solution here. Fees are fees, and that's how exchanges live. So we have to pay the fees. Only idea is to minimize those, and the best way to minimize those is using these discounts on the exchanges, and that's the best way to maximize the generated profit. Okay. Now, everything is great in a perfect world, but things go wrong. Very often on grid bots, we'll drop out of range. Out of range is typically, I've defined a range, we've got a grid levels, and now my bot has fallen below the range. Why does that happen? That happens typically if you were working on a range that was defined by support and resistance level, and that a support level broke. And so the price dropped to the support level, which is below that one. So your support and resistance broke, and your bought, the price went below your range. So now you're sitting in a situation where you've got your funds allocated, you're holding a bag pretty much, and the bot is not transacting anymore. So you've seen the price drop, it's not generating anymore the transaction profits. So what do we do? There is no magic solution. It's a situation that can be dealt with. There are different ways to deal with that. We really need to understand what is the impact of using either of the methods. And it's also going to be based on some technical analysis that you would have if you're expecting a price to bounce back, such as in this example, even price has dropped out of range. What do I do? Just wait it out. Still got 19% of profit. It's been running for 3 months. Overall, made 37% profit on the bot from the transactions, and it will come back. And it would typically be what do I do in this case? So different options that we have to deal with these situations. First option is what we call regrading. So we stop the bot, close the bot, accept the loss, and restart it on a new range, but you have accepted the loss, so you've typically lost your position on that. That's regrading. It does have an impact on on the valuation of your funds. It's just like a house. If a house, you bought a house at 100K, now the price is 90K, you say, okay, I'm going to get rid of this house. So you sell the house, 90K. Now you, rather than having 100K that you had at this before purchasing the house, now you only have 90K. So you've lost 10K. So from a wealth perspective, you have accepted the loss and said, okay, I'm taking 90K out of this. So regrading is not the best solution from my perspective. You can trail down, which is the second option, and we have the details of that just after. Trailing down, which is typically saying, well, in a trailing down perspective, price has dropped below my range. I can keep on investing on this bot. So I can add new funds and I'm acquiring new assets at a lower price. So trailing down can be interesting, but requires additional funds. It's new funds that you're going to inject in it. Stop the bot, stop and accept the loss, hodl the coins and wait for it to get back into range. But that's not a great solution. Be patient is another option. You just have to wait it out, wait for a month, 2 months time, 3 months time. I think I've got a few examples just after. So typically, once you're out of range, your current price has dropped below your range, what do? You could typically say, well, okay, I'm going to restart it. I've got possible new ranges that I can define. But all these coins that were being sold at the high end of the grid were purchased, most of them were purchased at high price. All these these green dots. So these assets that you purchased at high price, now you're selling them at a lower price. That's where you're in a way accepting a loss. Say if you bought some asset at $1,100 of a price, and now you're selling at 1,040. So basically, every time you're doing a sell, you're losing $60. And the transactions that you will have below due to the regrading, and just because you're transacting again, which is generating $1 per transaction, well, you'll require 60 transactions just to make up the loss of the regrading. So regrading is not always the best solutions. Still, uh, if we decide to accept the loss, accept it, move on, and just keep on transacting. That's another way. The grids can be defined in different ways. You can say, well, okay, I'm going to take all the assets that I have here, I'm going to hold them, not sell them, and I'm going to inject new cash to put in new buy orders. Then you're recreating a new grid with new investment and holding on to your coins, which is a bit better, which is a bit like the trailing down strategy, which allows you to have a better valuation of your buys and be able to make profit out of them. So regrading is one of the thing, and there's a whole detail about the how that impacts your valuation. I'll not go through all of the content here, but it's typically accepting a loss and saying, well, okay, I lost it. Let's restart. Just moving on. That's the thing. Trailing down is another way of dealing with out of range situations. They can be either manual or automatic. They can be automated by the fact that you're defining a trail down limit to the lower price, and whenever the price drops below the range, bot can automatically use those additional funds to buy new assets that it will place on the grid lines below. It can either be manual. There's a new feature on the Bitscap grid bot also that allows you to change the grid levels, that allows you to add and remove the grid levels manually. So you can either leave the top orders, remove them, hold them, put them on an earning mechanism on the exchange. And while they're earning on the earn system, you're injecting new funds to put in place the new sell orders here. So, but that is typically going to be additional funds. Again, this is all about having backup funds. And one of the mistakes that I see very often is people just throwing everything that they have on a trading bot. There is no way, there is no backup. So they're expecting it to rise, but if something goes wrong, you're stuck. And that's a very dramatic situation. You don't want to be stuck. So you always need to be planning on what can I do if something goes wrong. And that is all about portfolio management and how you manage your funds. If you don't have any backup funds, then you're stuck in a decision that you made a few months ago, a few weeks ago, and you made the wrong decision. So it's really about dealing with your funds in order to say, well, I'm going to trade with 30, 40, 50%, and I've got my backup resource, which is 50% of the FOD. That allows me to cover anything that goes wrong. And that is going to be the interesting part. That is for trailing down. Other options that you have, accept the loss, stop the bot, and say, well, okay, I'm done, and move on. Be patient. This is a very good example of being patient. This bot has been running for more than 2 years. It has had several out of range periods, long periods. This April, May, June, July, October. This one was almost 8 months. 8 months out of range here. Uh, just let it run. It's running, and now it's back in range. So at the end, that's the interesting part about this is that from a long-term perspective, just imagine, start this bot, never touch it. It's amazing. And it's generating. And it has generated 58% of profit. Just doing nothing. That's the beauty of grid bots. Amazing. So the portfolio distribution that I was talking about just before, uh, it's all about, not putting all the eggs in the same basket. That's never a good idea. It's a way to spread your risk, your exposure, and have backup plans. Be able to execute on backup plans. It's about hodling assets. It's about having dip cash or your backup reserves. It's about combining grid bots with DCA bots, with spot trading, diversification of how you are trading. Because sometimes a grid bot will not be profitable, but a trade would be profitable. But you never know it. You never know that in advance. So you have to wait and see what's happening. Eventually, you stop the one which is the less performing. And so you have to really have a strategy and a management around what is your portfolio and how you're dealing and managing that. Uh, Portfolio distribution, this is just an example of, not an example, this is actually what I've been doing personally. It's, bots are just 30% of the funds. The rest is cash, other investment, hodl, etc., which allows you to have different ways and different ways to solve issues that may arise because you read the TA wrong, you were expecting a price to rise, it went the opposite way. So combining all these tools, which is grid bots, which are long term, middle, mid-term, and short term, with DCA focused trading with holding, is something that allows you to really diversify your all your trading. Finally, a lot of resources out there for people willing to learn. There is a lot of resources around, there are stock charts, there are free trading courses. Investopedia is a very good source for understanding different indicators and how you can trade and, trading strategies, etc. There are a few very interesting people on YouTube. Rainer is one of those. Uh, it simplifies trading, how to read a candle, how to read a candle chart, what does it mean, what are the typical candle chart patterns, etc. Glassnode, Brooker Explorer, etc. These are learning areas that you can use, and most of them are free. There are a lot of free resources. We also did a webinar, last one, which was about making profit, and that was very much about understanding market trends, etc. There's a link to that. There's a whole Bitscap support uh, content, which is the knowledge base, all the help on the bots, on setting up the bots, how you can set them up, how you can use them, detailed videos, short videos on how to start a grid bot, on what are the meaning of the different options, etc. There's a YouTube channel also. There are a few YouTube users who publish content on different bots, on automating different with different tools. There are a lot of tools around scanning and monitoring assets. What is the top five of moving assets today? Which are the assets that have a high RSI? Which one are low stochastic? Things like that. Uh, Crypto Fear and Greed Index is a very good indicator for that. Rainbow Chart is a good example. There are a lot of resources out there that can be used. And there are also a few groups on Telegram, people publishing their own technical analysis on assets. Uh, they're quite interesting. I've not put them all here, but some of them are here. These are the most interesting and the most, I would say, clear, easy to use, simple TAs that you can use for your own trading. And there are many more resources around that. So that's it. We're pretty much done. I think if Arthur is here, we should be opening this up to questions now. Yeah. And, okay. Okay. Well, if let me see. I don't see if there are any questions on the YouTube side. I can see on Telegram. I don't see any questions coming up. So we must be very clear. Things are great. Amazing. Okay, so let's wrap this up if we don't have any questions. So thank you everybody for participating to this masterclass. We will be posting this on YouTube. It will be posted on the Bitscap YouTube channel. We hopefully we will be sharing the whole presentation deck for people wanting to look into the details. And that's it. Thanks again, and see you at the next masterclass, which should be in a few weeks' time. Yeah, yeah. Thank you. Bye bye.